Okay. Well, I would like as they send us to online. Now we are online, sir. If you are ready, let us start our.
Yes, I go to share screen.
Yes.
We are on YouTube, Faisal.
Yes, we are online, sir, for right now.
Okay.
If you are ready, let us start. Here you have the speech, sir.
Sorry, Harry?
Hi, sir. You have the speech. You can start, sir.
Oh, okay. Thank you very much. Well, thank you for this invitation to speak on your Saturday evening, and there's of course no reasons why we're not able all to be together, and that would be even better. But look forward to some future occasion being able to. What I want to do in this talk is just is to make some remarks about the relationship between financialization and the climate emergency, and some reflections on what I would call definancialization and addressing the climate emergency. When I use the term climate emergency, I include under that not only rising temperatures and all the effects which that would have on the climate, but also increasing uses of nature and environmental degradation to include under that. So I'm using that as something of a shorthand. And what I want to do is to reflect on some aspects of financialization and how we might want to change certain aspects or seek to change certain aspects of financialization, which would be conducive to addressing the climate emergency and shifting the economic activities in a much more environmentally friendly way. And, of course, there are many ways of defining financialization, but the one I shall effectively be using here is very closely based on the one which Gerald Epstein gave some 15 years ago, in terms of the increasing role of financial motives, financial markets, financial actors, and financial institutions in the operation of the domestic and international economies. And I would also add to that the effects upon society, politics, and the environment. But what I want to, in a way, stress in terms of what I want to be looking at is the not only the increasing role in terms of the scale of financial markets and financial institutions in economic activity, but also, of course, in influencing the political environment, but also the role of financial motives. And in some respects, I would want to, I think, argue that that increasing role of financial motives and rolling back on those increasing role of financial motives is a particularly important ingredient in addressing the climate emergency, of course, amongst many other things. I want to take it that what we've been observing over the last 4 decades in many countries, and certainly in the last 3 decades in others, is these processes of financialization in almost all countries of the world. There's very few exceptions to that. And of course, a financialization which has in a global form as well, in terms of the emergence of growth of global markets, financial markets, and that financialization has occurred pretty well everywhere, but it has taken different forms, different speeds, and coming from different starting points. And amongst other things, in the era of financialization, this era of financialization, it's involved the growth of financial institutions and typically the faster growth of financial markets. That is, financial markets, the amount of equity traded, for example, or the scale of the financial markets has grown faster than banks and other financial institutions. We know also, of course, that the a whole development of new financial instruments, securitization, derivatives, and so forth, which have typically been traded in financial markets, although with the involvement of financial institutions. And although not so relevant here, perhaps, is that the financial institutions, at least up until the financial crisis, often grew in a rather unregulated form, and with the growth of shadow banking outside of much regulation. But one other aspect I would particularly point to, and although this does vary considerably across countries, is the decline of mutual and public financial institutions. So mutual organizations, typically in some sense owned by their members, often with specific objectives in mind. In the UK's case, this was often the provision of finance for housing, but in others, it's like in credit unions, the provision of short-term loans for and the encouragement of savings by relatively poor households, and typically the decline of public financial institutions, whether in the form of the privatization of formerly publicly owned banks, or the decline of state development banks, although in the last few years there's been some, I think, at least renewal of interest, and there are some, of course, important examples of state development banks in the last years. So I want to consider some, but by no means aspects, of this financialization of relevance for addressing the climate emergency and so forth, and sketch out elements of what may be termed definancialization relevant for addressing the climate emergency. I think by starting, I want to though note that the relationship between the size of the financial sector, what often was called financial development, and economic growth has moved from appearing to be largely positive, even if the direction of causation was in doubt, to a negative one at high scale of the financial sector. So we know there are many economists who would argue that the development of the growth of the financial sector would facilitate savings, would enable to some extent the monitoring of the way that funds were allocated for investment, and enabling a linkage, as it were, between savings and investment, and this would help to stimulate economic growth. Whereas in, I say relatively recent times, although now the evidence applies over the last, say, 30 or 40 years quite often, the relationship between the size of the financial sector and economic growth, if anything, appears to be a negative one. So we have, in one sense, the paradox that if we're seeking to have an overall lower rate of growth of GDP, on the grounds that at least that is one aspect of addressing the climate emergency, that there could well be much slower growth, or has to be much slower growth in the future in order to reduce the whole range of environmental impacts. So we have this paradox that it appears that if we want to have slower growth, we might want to almost encourage the size of the financial sector. However, if we just for a moment look, thinking in terms of why it has been that why it appears to be that when the financial sector has grown, this has not, on the whole, gone alongside enhanced economic growth, and if anything, slower growth. Well, I would say, on the one hand, for at least industrialized countries, the level of savings has probably kind of reached a peak, as it were. That is, it's difficult to think that we can stimulate savings much more. And similarly, on the investment side, whether we want to actually stimulate the overall rate of investment anymore, but also that the financial sector has grown in terms of the trading in existing financial assets, that is the buying and selling of equity, for example. And that in and of itself doesn't, in a direct sense, stimulate either savings or investment. And so that growth in that sector, and that would include the growth of trading in derivatives and so forth, would not be expected to have much effect upon the overall rate of growth. And also there is typically the rise of lending to household savings. So in many countries, the extent of household debt has become something of an issue. Now, again, if the financial sector is growing because it is providing more household debt, then it's unlikely to be adding much contribution to growth. If anything, because we will be tending to diminish savings, and it may have some short-term stimulating effect upon consumption, but the long-term effect is unlikely to be very large. And indeed, one can think of other reasons why, particularly coming from the financial markets for mortgages, how instabilities in those markets have fed through into financial crisis. So my kind of working assumption is that the tackling of climate change does not require a great higher level of investment. Indeed, it may require a somewhat lower level of investment than we've had hitherto, but it does require substantial, what might be called green investment, replacing brown investment. So the overall level of investment may well be lower than hitherto, so we don't have to be too concerned, I would argue, of in any sense fostering more finance in order to have a higher level of investment, because I think we may on the whole want lower one. But much more important, not surprisingly, is that the finance and funding is directed in what I call socially beneficial directions. I think I would also, say at this point, I think one of the big challenges is the ways of trying to define or indicate what is meant by green investment rather than brown investment. Now, there have been some attempts, some of the financial institutions have sought to indicate what is to be understood by green investment rather than brown investment. But if we think of the whole chain of production, then to indicate that one particular production is going to be in some sense greener than another requires us to take into account the whole set of the production processes, the responses of people's behavior afterwards, and to try to understand and calculate that is going to be, I think, extremely difficult. But I would argue that we should be looking to place this set of policies into an overall, what I would term industrial strategy, within which the guidelines are clearly drawn up as to what would constitute green investment or brown investment, or degrees of greenness, degrees of brownness, and to find ways of fostering the development of those areas which are of the greener forms of investment. But the particular point I want to go on to is, what does this indicate about the development of alternative forms of financial institutions? I think we usually think in terms of banks and other financial institutions as essentially being profit driven, and that the allocation of their funds will be based upon their assessment of the creditworthiness and the financial viability of what they're being asked to lend into. And that we tend to think that of financial institutions as being concerned with this one kind of bottom line, that is, what is profits, and so looking at loans and so forth in terms of their creditworthiness and what returns they will bring to the financial institutions themselves. So however, we can, as I indicated, I think one of my interpretations of the way financialization has proceeded, it's not been one which has, I suppose, attracted a great deal of attention, has been the tendency for mutual financial institutions and state financial institutions to decline in importance. And if we think the other way around, we could ask, why would we think that these mutual organizations and so forth, why would we want to think in terms of their role? Well, to make the kind of, in one sense, the obvious point, the financial system or financial institutions are the gatekeepers for who is going to be allocated funds and finance. And the decisions that they make are going to help to map out the future evolution of the economy. On the other hand, the banks and financial institutions are making their own, as it were, decisions. So it is the managers of the financial institutions that are making those sort of decisions. And there is very little way in which we as individuals can signal that the savings that we make with those financial institutions should be channeled in particular directions. So to my mind, one of the arguments for fostering the development of alternative financial institutions is that those financial institutions in turn would have different objectives and would allocate funds on different criteria. So we do already have some financial institutions which operate on what they would term an ethical basis. So the way they would make their the sorts of schemes with which they will place money are those which meet certain ethical standards. Whether those ethical standards are the sort of sectors of the economy in which they invest, to avoid sometimes tobacco and alcohol, if those which are particularly sort of influenced by Islamic banking, for example, or those which are specifically designed to support local community developments, to support particular forms of green investment, and those which are particularly, let's say, in the direction of supporting nature and the environment more generally. But those institutions, nevertheless, will still have to, if they're operating in a sort of capitalist economy, have to satisfy some kind of break-even requirements. So they're still having to place their funds in areas which are going to give at least some minimal rate of return in order to meet for them to pay in turn their depositors. But I think we also need to bring into the picture the role to be assigned to the state-owned, what let me call it, for want of a better word, green development banks. I want to, I'll just give this quote from Stephanie Griffiths-Jones and Cossey, which I think illustrates, to my mind, the type of roles which the development banks could potentially play, and in some cases have already played. I think if we want discussing development banks, we have to be quite clear in terms of what their objectives are going to be and how they're going to be judged. And we will always have these difficulties of ensuring that they are indeed carrying out our requirements. But the objectives of a development bank have to be laid down through democratic processes, through the government and Parliament deciding what direction of development banks are going to go. And I think some of the remarks they make about development banks apply very particularly and very strongly to the case of addressing climate emergency and environmental degradation. So development banks are justified by the existence of sectors and investment projects that require funding for the future development of the economy. And as an aside there, let me say, I think that what is perceived to be the development of the economy, again, in turn, through a form of industrial strategy, needs to be mapped out. So what is the direction in which the economy is going to go in terms of what are the relevant balances between the development of renewable energy sources, for example, but there's many other examples we could think of in terms of the ways in which we want the economy to develop differently in the future to what has been in the past, but have high uncertainty as to their future success. Because of that, they may not be funded by the private financial system, which prefers sectors or investment projects whose expected returns are less uncertain. And we might also add that those that the investment in many of these projects, such as renewable energy resources, are likely to be paying back over many years into the future. And also that those investment projects, and I think solar energy has been a particular example of this, has been subject to intensive, what we call learning by doing. That is, the costs of production of solar energy has come down very dramatically as it has been developed. So these are often highly complex and expensive sectors and projects requiring sophisticated expertise in their evaluation that takes account of positive impacts across the economy and or those in which social returns exceed private returns. Now, whilst I would argue there is a very strong role for a need for something along the lines of development banks, as Stephanie Griffiths-Jones and others have argued, I think we also have to be wary of some of the issues that are involved, because as this quote indicates, we're wanting investment in areas which return social returns exceeding private returns, but private returns are what will pay the interest, as it were, on the loans. Social returns do not. So the ways in which the appropriate subsidy of this operates, whether it goes directly operated through the ways in which the development bank, both on the other hand, on the one side, calculates what rates of return are going to be required, and on the other side, what proportion of the revenues are returned by way of interest payments. So there's all these sort of, I think, very substantial issues of the calculation which are involved, and how do we judge whether their objectives have been met. I'll just go back a little bit. Let me also go back, though, just to what I was indicating about what I call here community-based banking, and the here. One of the features, again, of permitting alternative banking to arise is this notion that the ways in which funds would be allocated, which sectors would be favoured and which not, can be changed. And now another way, perhaps another way of approaching that is going back to some of the old policies which were pursued in a number of countries back in the 1950s and 1960s, which is the governing of the way that credit is allocated by the financial institutions, and making certain requirements in terms of the ways in which those banks the private banks allocate their funds. Now, we've been used to, I think, in the past that certain sectors of the economy would be favoured. So quite often, certain parts of the industrial sectors would be favoured, and the banks would have to, or were encouraged or pressured to place credit in the direction of certain sectors of the economy, which were regarded as those which are going to be developed. At least in the UK, and I imagine elsewhere, industry and firms were favoured over private individuals and households. So that I would advocate a return to policies along those sort of lines also, where we seek to intervene in the ways in which the financial sector allocates funds and make requirements in terms of the direction in which those funds are allocated. Now, I sometimes use the analogy here, or comparison here, between the Community Reinvestment Act in the United States, which, as I understand it, places requirements in terms of banks and to place a certain amount of their investments in the communities in which they operate. And this again kind of throws up all sorts of issues in terms of how are we going to lay down the criteria on the basis on which this is going to be allocated. And that, again, I think takes me back to the argument I was putting in terms of the need for an overarching industrial strategy within which judgments will be made in terms of which of the sectors to be favoured and which are not. And we know that there will be all sorts of difficulties of being sure that the funds indeed are flowing to the sectors which are to be favoured, as it were, that projects can be presented as though they appear to be green when they're not, for example. And so there are, I think, many difficulties of implementation. But I think that I'm arguing for a direction of travel, which is in terms of going back to some forms of credit allocation rules for financial institutions. And I think also at this point, I would also make the point that, which is a point which Bob Polin and others have made many years ago, that for these purposes, banks are and financial institutions are better able to be monitored and to allocate funds in particular directions as compared to trying to monitor financial markets and the way that they operate. Now, the second element I just want to point to, and I, in some respects, I think regard this as the a particularly important, I do regard, sorry, a particularly important one, which is to reduce the role of financial motives in calculation and decision making regarding the environment and nature. I think the financial motives and the financial calculations kind of split into two. That is, there are the financial motives and then the financial calculations. I think the financial motives is the particularly important one, that relates to undertaking projects because they appear to be financially beneficial, i.e. the private returns exceed the private costs, which obviously doesn't take into any account of social benefits and social costs in that. So that the development sort of in terms of the way that nature is treated are based upon whether they're going to be private returns rather than social returns. The calculations in decision making, I think, is in some sense much more difficult, because even if we think in terms of making calculations based upon social costs and social benefits, we tend to be still making those in kind of financial terms. That is, we are trying to boil down social benefits and evaluate them in monetary terms, and we are trying to boil down social costs and express those in monetary terms in order to make a comparison between them. And so that appears to bring in certain at least financial calculations. Now, I was trying to think in terms of the way in which governments have responded to the COVID-19 pandemic and the way that they have responded to that. And one of the things which I think stands out to me is how, at least on the surface, how little economic calculations or financial calculations have come into that. Now, there have been some of those in this country, and I think probably even more so in the United States, that have argued that particularly the sort of lockdowns that we have had to experience in terms of limits on our ability to go out and our activities and so forth, that those restrictions and the loss of employment and the loss of national income that has resulted from that have been much greater than the gains from reducing the spread of the virus. And if you start taking into account that, at least in this country, many of the people that have died from the virus have been my age and older, and the loss of their years of life has been, in that sense, relatively limited, then you could say, well, given the way that the lives are evaluated, and again, in this country and I think elsewhere, if one is evaluating health expenditures, so-called quality adjusted years of life come into play. Well, if you do it in those terms, I suspect, it's rather gruesome to go through it, but that one would not well have decided, well, the costs of dealing with the virus have been greater than the kind of benefits from that have occurred. But whether you go along with those arguments or not, the point I want to make is that one doesn't see financial calculations really coming into the picture when in this country we've had changes in the rules that govern our activities on a almost weekly basis. One doesn't get any sense that what is going into those calculations are any notion of the of financial calculations. There are going into it notions of what the effects may be upon our health service, whether that will be overwhelmed. There are some calculation, some assessment of what are the damage that has been done to children's education, but those are, fortunately, I would say, are not being evaluated in economic terms. So I think that is perhaps an example of where decision making has, fortunately, in many ways, moved away from these financial calculations. So just as a general point, I want to make the point that there are projects which are environmentally friendly and socially beneficial, but which do not readily generate financial returns. And in some way, we have to find ways, and the State Development Bank, direct government funding, obviously ways of doing that. Those are taken out of any notion of the financial system. And that, I think, could be much more widely applied. But I think there are also activities which, in effect, need to be decommodified and taken outside of the market. Now, I think we can debate over what range those should be, but a range of the provision of universal basic services. We've, on the whole, been used to that in the areas of education, but many of those can be extended into other areas. And not only is it the provision of things like education, but also the provision of access to parks and the access to nature and all those sort of issues. So I just want to end with this quote from Finance Watch, which is a Brussels-based organization, which argued for what they term public finance being especially useful for projects that provide public value without being financially bankable themselves, and in particular with regard to the protection of nature and biodiversity. They point out that the nature of private investment is to focus on financial risk and return and revenue streams, but many nature-related, what they're particularly concerned with, many nature-related projects have no revenue source. Indeed, nature tends to benefit when there is less economic activity. Conversely, it can be easier to finance businesses that keep their costs low by harming nature. And it argues that nature projects are often too small for institutional investors to invest in directly, complex to understand, and so forth there. So that is, again, arguments for providing a whole range of alternative ways of financing these sort of projects, or at least providing the funds for them, and to try to take them out of financial calculations in this respect, and realizing that trying to do things like price nature is inherently so difficult that it's perhaps better not to try to attempt it, but to try to look at what would be overall generally socially beneficial. So just to, I think, run my time, but just to summarize, what I've wanted to do is to argue there are a number of aspects of financialization, and I've only looked at a small number of these and many others. And what I particularly draw out of that is the need for the fostering and development of alternative financial institutions which are not based upon profits, and moving in the direction of taking out a number of activities from what might be termed financial calculations in order to deal with these, what are effectively the externalities of dealing with the climate emergency. Okay, thank you very much for listening to me.
Well, thank you, sir, for the beneficial knowledge that you have shared with us, sir. We got one question. I think you can see the question in the chat below. Chat, when you click.
There's nothing appearing there.
Okay, no problem. Okay, why? The question is like that. Why state-owned? Why not more granular? Social benefits are responsibility. Social benefits and responsibility are multiplied, they say. The question is down there.
Oh, yes, I see it now. Yes, it's come up on my screen now, yes. I think in some ways, no, I think in one sense I agree with that. That is, in terms of granular, I think when I was presenting it, I was maybe put more emphasis on the State Development Bank than I would want to. I would see the argument for a whole range of ways, although I would see the role of the state as we're setting out the parameters of the economic development and social development of the economy. And within that, there are a whole new number of ways in which finance and others can be organized. So I see a role for a state development bank. I see a role for the state itself, just through the actions of say, local government. And I see a role for alternative financial institutions, where financial institutions can, or some can be set up with the explicit intention of, for example, funding forms of green investment. So that if I want, as an individual, if I want to put my money where my mouth is, if you like, I can then potentially place money with such a financial institution. So I would say there's a whole range of ways of doing this. And in terms of being granular, one also has to look in terms of what is appropriate at the national level, what is appropriate at the local government level. And I think we have to go much more in terms of some are appropriately carried out at the national level. So the overall development of the economy, which sectors are going to be developed and which are not, that has to be a a national government decision. And that also has to be, in my mind, backed up by the way that fiscal and monetary policy is operated. But many other aspects are much more at the local government level, so that schemes of reducing local pollution, for example, or have to be traffic calming schemes, or those sort of schemes have basically much more appropriately done at the local government level. So there's a whole mixture of ways of doing that.
Well, thank you, sir. I think you're finished.
Okay, thank you.
Yes. Well, as you will be in the next symposium, you will be our keynotes. So, do you have any advice that we can take it into consideration? And we are hopefully that we expect your coming after the pandemic on May. You will attend, and we will see you face to face and to attend your speech.
That would be great. Okay.
So if there is any advice or anything, you can send it to us about and your ideas. We are waiting for it.